All right, so the crypto infrastructure space in 2026 has become genuinely difficult to read clearly. Not the market itself, the tooling around it, AI trading platforms specifically. The sheer volume of new systems that have launched in the last year or so has made it almost impossible to separate what's real from what's just well-assembled marketing. And that's kind of become the core focus here. Not picking trades, but actually pressure testing the infrastructure itself across enough time and enough conditions to form a real opinion. So rather than rushing the setup, gonna go through each step and explain what's actually happening, because configuration logic here is worth understanding properly. Starting with preset selection, 3 modes available: safe, optimal, aggressive. This is the foundational parameter for the entire session. It sets how the bot approaches execution, what risk exposure looks like, return targets, and the capital minimum each mode needs to function. Okay, then neural network selection. This is where the actual AI model gets assigned, and these are different from each other, not just different names on the same logic. Each model is trained around the specific type of market environment. Some are built for high volatility, fast-moving conditions where opportunities open and close quickly. Others are optimized for slower, tighter price action where precision matters more than speed. No strong conviction on current structure, so auto-select handles that call, scans what's happening live and assigns whatever model fits best. That's where things start here more often than not. Okay, capital amount next, just whatever the session calls for, nothing complicated there. Okay, next is network selection. The platform reads live on-chain data and ranks available networks by current congestion levels and real-time fee rates. So the list that shows up reflects what's happening across the chains at that exact moment, not a preset ranking. And that's relevant because network fees reduce margin directly. Across a full session, those costs can shift the actual result in ways that aren't obvious until after the fact if the wrong network gets picked. Okay, then authentication. 2 paths here: Wallet Connect, where the system manages entire connection process automatically, or manual, where the transaction gets submitted independently. I choose manual to keep every step out in the open. Okay, then I press Start AI. Model loads, preliminary calculations run, system locks onto current market conditions, and then it's live. Good. Now we wait a few minutes. Okay, pause the session, ran close to 5 minutes, and results are on screen. Total balance, net profit, number of trades executed, win rate, total runtime, clean, everything in the one view. So withdrawal step. Here I need to select a token, add my receiving address, and press confirming. Okay, protocols processing. So while that clears, worth talking about why AI agents have become the dominant direction in the space, because the reasoning is pretty straightforward when broken down. The core issue is that market conditions in crypto shift too fast and across too many variables simultaneously for any fixed approach to keep up. Gas fluctuations, liquidity depth, cross-chain spreads, that entire picture changes in seconds. AI bots are built to hold all of that simultaneously and act on it in real time. It's not just a speed advantage, it's a structural one. The market has essentially moved past the point where anything non-adaptive can compete consistently, and that gap is only getting wider as the infrastructure matures. And what specifically stands out about this platform after extended testing, the configuration depth is uncommon for something this accessible. The neural network selection changes how the system behaves at a fundamental level depending on which model is running. The preset tiers aren't just risk labels, they affect execution logic, capital allocation, target thresholds. And the real-time network routing means the system is adapting to on-chain conditions rather than operating off static assumptions. That combination of actual customization depth with an interface that doesn't require a technical background to navigate is something that's pretty rare to find in one package. And look, the longer this process goes, the more time spent running across different systems, the more obvious it becomes that longevity is the clear signal in the space. Most platforms have a shelf life, a few months of solid performance, maybe a full cycle if things go well, and then either the consistency drops off or the project quietly disappears when conditions shift. This platform has been operating across multiple market cycles now through volatility regimes that ended most of the competition, and the performance has stayed stable through all of it. That's not something that gets faked over years. It just either holds up or it doesn't, and this one has. Anyway, I hope this was actually useful and worth the time. See you in the next one.